p.m. And this is the regular meeting of the El Paso Central Appraisal District Board of Directors. And I'd like to go ahead and call the roll. Mr. Velarde?
Here.
Ronald Lowenfield?
Present.
Gary Gondura, I believe, is on his way. Chuck Taylor?
Here.
Michael Nahara?
Right here.
Sam Trimble?
Present.
Mike Rosales?
Here.
Vince Pettis?
Present.
Laurie Searles, present. We're all here. So if you'd like to join me, please stand for the pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Honor the Texas flag. I pledge allegiance to thee, Texas, one state, under God, one and indivisible. Thank you very much.
All of them?
Yeah. So it looks like we have no one signed up for public comment tonight. So our number one agenda will move to number 2. And that would be the approval and the signing of the minutes from January the 10th, 2019. Is there any discussion, corrections? And if not, I'd entertain a motion to accept.
Move to accept. I'll second.
Thank you. Mr. Pettis moved to accept, and Mr. Lowenfield seconded the motion. Everyone in favor?
Aye.
Aye. Opposed? Hearing none, motion passes. Next agenda item would be our review and approval of our financial reports, November 2018 and December 2018. Are there any questions, comments? Good evening, Ms. Goldman.
Good evening, Rosa Goldman, Chief Financial Officer. And we are presenting the report, the financial report for November and December 2018. And as you can see, the report for each month contains the balance sheet, the report of revenues, expenditures, and changes in cash balance, the investment report, and the note to the financial report. And under the notes, well, we didn't have any additional, any over budget accounts during those 2 months. And the litigation reserve continues to be the same amount. We haven't used anything, so we still have the $676,876. Are there any questions?
And this is, I didn't bring my glasses, but I did make some notes here. I just noticed that in November, we had a, investment-wise, we had 3 entries, and I'm referring to Wells Fargo accounts.
Yes.
And then we go back to December, and then only 2 appeared. So apparently we moved money from.
Correct, and some of that probably was matured.
The maturity. And
Right, because we only invest for 30 days, 60 days, and 90 days. So it goes like very quickly.
the other question I have, in terms of the fund balance, do we maintain about 4.7 million?
Well,
Is there an average?
well, actually, we don't really have a fund balance. We are a zero balance budget. We use our monies, whatever we don't use from the budget, the monies that we receive, we return them to the taxing entities. So this fund balance is just for accounting purposes, your assets minus your liabilities. And your assets, as you can see, a lot of that is assets, fixed assets. So that's basically what will make your fund balance, whatever is, the fixed assets.
Okay. All right.
That's all. Thank you, Mr. Rosales. Any other questions? Yes, ma'am.
On the reported revenues, expenditures, and changes in the cash balance,
Yes, sir.
under payroll-related expenses, I noticed that the variance for that I guess on a percentage basis, is probably one of the larger ones listed. There's a $120,000 variance for the year-to-date budget that's 672. Do you know what the primary factor is for that?
Can you tell me which month? I'm sorry.
Well, it's further down in after the balance sheet.
Yeah, but which month? November or December? Because we are presenting two.
Oh, so well here in December.
Oh, you are in December. Okay.
Yeah,
okay.
in December it has a $120,232 variance for
In
payroll.
the legal fees account.
No, under payroll-related expenses.
Okay. Right. We allocate every month whatever we think that we are using from the budget. And at this point, we felt as of December that for the year to date, we had allocated as of December $672,000, and we actually have only spent $552,000. So it looks like towards the end of the year, we may have left over there.
So what is that? What's under the category of payroll-related expenses?
It can be the health insurance. It can be the TCDRS, the pension. It can be
dental,
yeah.
Vision,
and the
FICA, Social Security.
right.
It's all the other
Well,
expenses.
yeah, some of those under the one below, the payroll tax mandatory, which are this where has your FICA. But the one will have also the, whatever we have for the life.
In
So
the
they will be
budget
under
under-
payroll-related expenses.
Payroll-related expenses under the budget will show health, vision, dental, life, disability, and assistance programs.
Right.
Employee assistance programs. So
It's in the budget.
your health is your biggest. It's your
And this is
largest
a
item, and it is
and-
in your budget.
Right, and this is a positive variance, which means that we have spent less than what we have budgeted as of December.
Right. Okay. No, I just wanted to see. I mean, I guess there is just a large variance because on
That's
November
right.
it was on track. for the
Right,
most part.
right,
It was only a difference of 107, and then just to see the jump to 120, I don't know if there was something in between then that caused that.
Yeah, like I said, we allocate every month what we think we are going to be using from the annual.
Does that answer your question, sir? Any other questions, comments? Not hearing any, is there a motion to approve our financial reports for November and December 2018?
So moved.
Thank you, Mr. Rosales. And a second?
Second.
There was a motion made by Mr. Rosales and a second by Mr. Pettis. All in favor? Aye. Opposed? Hearing none, the motion passes. And that would take us to number 4, our monthly health benefit report for November 2018 and December 2018.
And you also have two sheets with that one for October, November, and the other one including December. For November, deposits of $107,000, and then the claims paid $108,000 would give us a balance of $410,771. And then for December, the deposit is very similar, $107,976. The claims paid is $202,721 and gives us a balance of $315,964.
Are there any questions? No? Thank you, Ms. Goldman. This
Thank you.
requires no action. Thank you, Board. That'll take us to number 5, discussion and possible action regarding the 2017-2018 financial audit. Good evening, sir. Thank you for joining us.
Good evening. Thank you all for allowing us here. I'm Renee Pena, representing Pena Brianos McDaniel, and this is your annual audit. So I'll try to make accounts out of you all and help you understand this financial report, but I promise to keep it short and sweet. If you have any questions, please do not hesitate to ask them, if you would, please. I've given you a few documents, and again, I will try to keep this brief, but I'll try to point out what I think are the important trends that I, as an auditor or as a financial individual, think are important. So the first thing I've given you in the front of that book, in front of the blue binder that I gave you, is a one-page report. And I call this my flash report. It looks like this right in the very, very front, I believe. Oh, are they in the other? I may have passed out the wrong ones. You got one.
Did y'all get one? Anybody? Oh, okay. I'll get them to you.
Yeah, that.
Chuck, it's in this book.
Here, if I could pass these out.
Yes, please.
She'll be bringing the rest of them. There you go. I passed out the set that was staying in-house. I can go ahead and talk about this briefly as she's passing those. So this is a 5-year, one-page, as I call, flash report, but it allows you to see the trends of the organization and how the organization is doing over a 5-year period. And what it's showing me, and again, this is representative of the city of El Paso, that we have had significant growth. What you'll see as you get this report is that 5 years ago, 2014, we had $6,016,000 as our total current assets, which basically is the cash that we had at the end of the year. And now we've grown all the way up to $8.2 million, which obviously is a significant growth. And just from last year to this year, the cash, the current assets, grew from 7.2 million to 8.2. Moral of the story is we're growing. The city is growing, and the amount of taxing jurisdiction dollars that are coming to the center has grown significantly. Your total assets are at $12 million compared to $9.4 million 4 years ago. Again, definition of growth. And the difference between most of your cash, your current assets, and your total assets mostly is the property, plant, and equipment, which we'll get into in a minute. All in all, your total, the other major item in here is your net pension liability. As you all, I think, are aware that back in 2015, we were required to record the pension liability of the organization. And I think what's really good news is when we recorded that 4 years ago, it was sitting as a pension liability, the unfunded portion of $1,700,000, and now you're down only $576. And when I look to show you your audit report, you're going to see that you are basically about 85% funded with a true discount rate of 7%, and you're about 100% funded if you use the 8% discount rate, which I think is too high. But that's another story, and I'll point to that in a minute. Bottom line is, congratulations, your pension plan is in very, very good shape. The total revenue stream, as you can see, again, representative of El Paso, has grown from $12.4 million to $13.9 million, a nice $1.5 million growth in this 5-year period, reflection not of increased taxes, but mostly of increased growth in the city. And then I'll go ahead and say, and the good news is that our costs, the expenditures that we have grown from 12.4 to 13.4. So we've generated a $1.5 million increase, but our cost has only gone up only $1 million. So that, again, that's a positive number, especially for auditors to report on, because that means that we have grown and we've been able to retain some of that growth. So all of that being said, it's allowed the amount due back to the taxing jurisdiction this year of $1,161,000 compared to 5 years ago, we were giving back $600,000 to the taxing jurisdiction. And then the deferred revenue, that's the advance payment that came in on the last quarter, is at $3,800,000 compared to $3,500,000. So again, it is costing us a little bit more to run the organization. So there in a nutshell, you have a nice 5-year history. And when I say nice, it means I think the history has been very, very good. Shows a very positive trend for El Paso and very good control management by the organization, controlling costs. So if you don't mind, I'll say that's the first part. I'll get into, that's looking at the forest. Let's look at the trees, kind of dissect it just a little bit. Again, I won't keep you more than a few more minutes. If you look into the book that you have in front of you, the blue binder, And if you would flip over to page 5, not Roman numeral 5, first of all, it is an unqualified report, meaning it's a positive report in accordance with GAAP. And over on page 5, I'm sorry, I should have said page 4. Over on page 4 is what's called your statement of position. So this is a picture of time. This is what you looked like on September 30th, 2017 and 2018. And again, just pointing out a couple of quick numbers, your cash and cash equivalents are at $8,100,000 compared to $7,200,000. And if I could ask you to flip over to page 9, because you brought up the question a minute ago, I just wanted to point out over on page 9, well, what makes up that $8 million and that $7 million? Well, you can see that we do have, and you started this policy few years ago, several years ago, where we said, hey, we've got excess money for 3 or 4 months. Let's do something with it. And I hope you all understand that you all have $3, $4, $5 million for 3 months, and then it goes down to 0. Not 0, but close. And then it goes back up to 3 million, then it goes back down. So we said, let's do something with it. Well, you all started putting it into the money market fund, and it's a short-term obligation, less than 3 months, so it does turn around very quickly. But what I wanted to point out is the success of that. This year, that investment brought in $76,000. Last year, brought in $33,000. That's 100% growth, number one, but that's $76,000 that the taxpayers aren't having to pay to help run this organization. So it's been a very positive move. So your actions do have direct results, is what I'm saying. Back over to page 4. So let's pat on the back, guys. Back over on page 4, the other couple of major numbers are that your total equipment, I want to point this out, is sitting, your property, plant, and equipment is sitting at $2.8 million this year, $2.8 million last year. But again, if you wouldn't mind flipping over to page 11, I wanted to point out something that could be affecting your budget in the future. If over on page 11 is the detail of this $2.8 million. If you go up to halfway of the page, you'll see that our balance of the assets is at $7,200,000. The depreciation on that is $5 million, and that's how we get to the $2.8 million. But what that really tells me is I have basically 2/3 of all my assets depreciated. Well, that tells me I've got an old truck, and that old truck has 1/4 or 1/3, I should say, 1/3 of its life left. And that means I may be needing to replace that in the budget. So I'm just bringing that up for future budgetary planning, that when my assets are fully depreciated, it usually means I need to go back to the farm and buy some new assets. So again, just a fun fact, if you would, okay? So back over to page 4, just jumping down to a couple of the last items. Again, as an entity yourself, you really don't have a fund balance other than the fixed assets net of the loan against those fixed assets. Otherwise, you do not have a fund balance the way most businesses run, where they have a capital structure. So that's why you all do have the policy, if you would, of drawing money in on a quarterly basis and then turning around and paying it back at the end of the year. So on that note of paying back at the end of the year, due to the taxing jurisdiction, over about the middle of the page, this year is at $1,161,000 compared to $993. The reason it's grown this year, quite honestly, is because y'all had budgeted expenditures, actual expenditures under your budgeted expenditure, and so more is going back to you all, the taxing jurisdiction. And if we could flip over to page 4, I can point that out a little bit better. So over on page 4 is your statement of activities. What did we do? What activities did we do over these 2 years period to present and create that asset position? Well, first of all, total revenues. This year we brought $13,945,000, the top left-hand, right-hand side, compared to $13,300,000. So we brought in basically an extra $500,000, $500,000 this year over the previous year, all coming in from the taxing jurisdiction, from the revenues of the city. And what did we do with that is on the next lines, where we spent in personal services, material, and professional fees. We spent a total this year of $13.4 million compared to last year of $13.9 million. So we actually reduced our year-over-year expenditures by basically almost $500,000. So on top, we brought in an extra $500,000, and on the bottom, we spent less $500,000. So again, we had very good management efficiencies to control the cost. And if you wouldn't mind digress again, flip over to page 27, because here I'm giving you some big numbers, 9 million, 2 million, but what is it really? From a business standpoint, if you look over at page 27, that page reflects your budget to actual comparison. And this gives you, for budgetary purposes, a better analysis of where you spent your money. So first of all, again, the taxing jurisdiction, we had budgeted them to bring in 14.9. They brought in 14.9. All in all, we brought in an extra $100,000, mostly due to the rendition penalties and also our interest income being $36,000 more than what we had planned. So all of it very positive news on the revenue stream. How did we spend it? Well, you can run your finger down the extreme right-hand side, and you can see that we underspent our budgeted salaries, our employee benefits, all but a couple of items were underspent in our budget compared to actual. And as a result of that, in total, over on page 28, we had total expenditures budgeted of $15,004,004, and we spent $13,945,000. So that's where I'm saying management did very well by reducing costs by $500,000, increasing revenue by $500,000. Well, they didn't do that. They came in because of taxing jurisdiction, but generating an extra $1 million for the organization that goes back to you all. And I think that's a good place to stop, unless you have any questions. So again, it comes down to congratulations. It's a very good report. I think it's a very positive reflection on the growth of El Paso and a very good positive reflection on management control over the expenditures that we have. There is one last page on the back. It's a quick management letter comment, and I'll just summarize it. It says that we did look at your internal control, your compliance with the regulations, and we had no issues or findings.
Thank you very much.
Well, again, any questions? Nope. You don't want to hear any more numbers? Okay, thank you all very much. I appreciate you.
All day in those things.
Right.
Thank you very much, Mr. Pena.
And this is the same report that we sent you at the beginning of the month. There's been no changes to it. So those of you that looked at it at the beginning of the month, same thing.
Any questions, comments? If there are none, is there a motion to accept our financial audit for 2017, 2018? Thank you, Mr. Velarde. Thank you, Mr. Rosales. A motion made and seconded to approve the financial audit of 2017-18. Mr. Velarde made the motion and Mr. Rosales seconded. All in favor? Aye. Opposed? Hearing none, motion passes. So now we come to number 6, discussion and possible action regarding the EPCAD investment policy.
We sent this out last Friday. It is the exact same investment policy that we sent out last year. There's been no changes to it. We reviewed it with our auditors and against any changes in federal or GASB law rules, and there have been none, so there was no updates we had to do. It's the same investment policy as approved last year.
Are there any comments or questions? Hearing none, do we have a motion to approve the EPCAD investment policy?
So moved.
Who so moved it? Thank you, Mr. Trimble. Mr. Trimble moved and Mr. Pettis seconded our EPCAD investment policy. All in favor? Aye. Opposed? Hearing none, it passes. The next we have is discussion and possible action regarding the contract with TREP.
Okay, board members, you did receive in the backup some information regarding this company. What this is it's just another publication for the appraisal district to be able to utilize. The nice thing about this publication
is it gives us information on commercial properties. It gives us detailed income statistics. It gives it net operating income, net operating expenses, so that our commercial department can utilize it with our other publications that we receive to see what kind of rents are out there. It is, TREPP is a loan company. They loan money to commercial businesses, so they will give us that information. It is confidential. We can't use it one-on-one to be able to go in and say, hey, looky here, we're going to raise you because of this. It's part of a pool of data that we put together. So we visited with them. James Thompson from my commercial valuation director looked at everything. We reviewed the contract. They're going to give us a discounted rate for the first 12 months of $2,600 a month. We do have it in the budget. It's $31,200 for the year. We have money in the budget for publications. We would like to give this a shot. We have a potential for a 3-year deal with them, but we want to do 12 months to see how it plays out, how much information we really do get. We do know that there have been several appraisal districts that have utilized it. Williamson, which of course is Round Rock, Georgetown, Pflugerville, Travis, which is Austin, Bear, which is San Antonio, Fort Bend, and Lubbock have already contracted out and have been using their data. So we'd like to give it a shot. We do have money in the budget for it. Because it is over the $25,000 that you allow me to approve, and it is something new, a new contract, we're bringing it to the board for any discussion and approval.
Yes, sir.
Question. I see the proposed expense here. Do you have any projections on the financial benefit that we should
No, we
receive?
don't. That's why we're going to try a 12-month period to see. I will tell you this, with Texas being a non-disclosure state, any information that we can get on commercial properties is going to be a benefit. Because until they file a protest, and even going before the appraisal review board for their protest, they don't have to bring in any income information. Only until a lawsuit is filed by either us or by the property owner, which is 99% property owner, will we finally be able through discovery. So this will give us hopefully information at the beginning of all of this process, so that maybe we can stop some of those lawsuits. Maybe we can have a little more updated information, more accurate information. So we're not sure. We haven't. I think it's fairly new. I haven't gotten any results from the other appraisal districts. They're in their first or second year using them. I don't have any statistical analysis from them yet. So we'd like to see what happens. That's why we're looking at a 1-year trial and then go from there. See how much we really get out of it. But I will say this, any publication that we can get commercial data or sales data is a plus. Because we just don't, it's a non-disclosure, so trying to get that information is difficult.
Yeah. Can I follow up? real
Yes,
quick?
sir, please.
Subjectively, it seems like a great thing, and I'm happy about it. But on the number, on the return, is this something that you anticipate to make a huge splash, or is this something that you hope just kind of improves efficiency?
I think I'm not looking for a big splash. I'm looking for an improvement of efficiency, maybe a confirmation of numbers we're using, which will help us in like lawsuits we
Right.
confirmed, or with the property value study with the state, because they come in and they test our commercial values and our residential values, all of our values. So having that information, if the state comes in with another number, but we have this, then that will help us to defend the number that we're using because of this. I see it as more of a benefit tied in with everything else that we have, kind of a pool with all of our data to give us a stronger number at the end with everything else that we have.
Thank you.
Mr. Taylor, did you have a question, sir?
No, I think she answered it
Okay.
to my satisfaction. Yes. On his input.
On his right.
Okay. Mr. Rosales?
Question I have, what have we been using? Because
Well-
I understand what you said, but, I understand, but what have we been using?
We have a publication called Costco, which gives us sales information. We have LoopNet, which gives us sales information. We have a service that gives us information on apartments, a separate publication that we get that gives us information on apartments. We have another one that we get information on shopping centers. So there are several publications out there that we've been using. This is one that is specifically for commercial properties, and it's not sales, it's based more on finances. We don't have anything like this
Okay.
because it's based on the financial information of a business other than the sale.
How do we compare to other cities in terms of commercial valuations?
In my director's report, I'm going to give you an update on the property value study that the comptrollers did, and I have some other ratios from some of the other appraisal
up? Are we
districts
down?
that I can tell you. We're right on the money with everybody else. So, in our property value study. And I'll give you that information during my director's report. I have those numbers to give you an update.
Thank you.
Yes, Mr. Velarde?
As I always like to ask on these purchases, we're within procurement guidelines. You have it in the budget so that maybe we're going to shop for this?
This is the only one that offers this. There isn't anything that we've seen that has offered financial data on commercial properties. We use a Dodge report is another one that we use, and that's commercial sales. So we do use that. So there's a lot of different publications that we use. So a publication is whatever publication is out there, we want it. You
It
know?
doesn't reach the threshold for an article.
No, sir, it doesn't. Yeah, it's 31.2, but we still look, and it's the first time we've seen something like this. And I will tell you this, I know it's the first time because my staff's been bugging me like crazy for the last couple of months. We want this, go to the board, we want this. So, if they had seen something earlier, they would have, you would have come to me on it.
So essentially, you're asking us for a one-year contract with them at a reduced rate, which is in the budget.
Right, which is in the budget, is 31,200. Now, what we'll do is if we feel like it was a really good year, we'll come back with a report, an analysis, and then ask to go ahead and go for the 2 years that will give it a 3-year contract. Because they normally do 3 years. They don't do 1 year, but they're offering us a 1-year trial at this amount.
If we go to 3, what does the cost go up to?
The cost will go up by about 5% each year.
Yes, sir.
So is it a 3-year contract with an exit or an out after the first year?
Yes, sir. And the contract, before we sign anything, it will go through our attorney to make sure it's a correct contract and we're not being obligated. But in the contract, they did say that it is for a 1-year trial, that unless if there's no money in the budget, then we're not obligated to the next 2 years.
And how will we assess the benefit?
Well, what we'll do is we'll give a report as to, it'll be kind of difficult, but we'll look at our ratios on our commercial properties and kind of give you an idea of, did it help us any? Did it help substantiate some of the protests that we have? We were able to utilize it. Hopefully be able to give you a report based on that. We should be able to see some form of numbers, some matrix that we'll be able to give you as to, did we see any increases based specifically on this and not on the hodgepodge of everything else that we use. We'll keep track of that.
Yes, sir.
Just out of curiosity, how'd you find this product?
We started receiving in our emails like a publication, like a news blurb that would be talking about financing or loans of certain businesses. And we started looking into it, and then one of the other appraisal districts had told Mr. Thompson, by the way, we found a new company, we're using this, and so then Mr. Thompson, my director of evaluation, researched it and came to me with a, please, 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 please. Can we try it, And to me, why not try it? It's just another form of information that we don't have, so let's give it a shot. It's not going to hurt us, by trying it.
Any other questions? So do we have a motion to approve the 1-year contract with TREP for the amount of, I think it was $31,000?
I guess the motion should be clear, though.
$200.
3-year contract with a 1-year out.
Is that correct?
think
Yes,
we
then
ought to
please make your motion.
So move.
So that's for a 3-year contract with the 1-year out on it for $31,200, and there is money in the budget.
Right, and the $31,200 is for the first year, and then it will be renegotiated. as we
Okay,
go.
and Mr. Nahara made the motion, and who's going to second? Okay, Mr. Velarde got the second. Thank you very much. All in favor? Aye. Opposed? Thank you. That'll take us to number 8, discussion and possible action regarding the Vehicle Inventory Tax, VIT, interlocal agreement with El Paso County.
What this is, and I would like to introduce, we do have some folks from El Paso County here. Mr. Ruben Gonzalez is here. He's the tax assessor collector for the county of El Paso. And then Sergio, I'm sorry, I don't remember your last name. Yes, okay. And he's the code compliance officer with the county tax office. What this is the legislature passed several years ago a vehicle inventory tax, and Mr. Lowenfield probably knows all about it. And what a car dealer, whether it's a new car dealer or a used car dealer, they have to supply a monthly report to the county tax office of what their inventory is. Vehicle dealers got together and said, we don't want to be appraised as of January 1 or as of September 1 because our inventory, you shouldn't be looking at us at one time. It should be looked at it on a monthly basis. So they submit a monthly report to the county tax office. We get a copy of that report. At the end of the year, they're supposed to submit to the appraisal district a declaration. And then we take that declaration and we submit it to the county. And the property owners have to pay the difference of what they paid in because when they pay that, when they send that report every month, they make a payment. They make a tax payment. If they paid too little, then they get a bill for the difference. If they paid too much, then, well, thank you very much for the extra income to the taxing entities. There's no refund on that. Well, everything's been running along really smoothly, but what we found out this past year, we've been working on this for several months. I want to say probably since about April or May of last year, we've been working on this agreement. What we found out is there's a lot of new used car dealers, and there's some new folks coming. They don't know what the code is, and so they're submitting their declaration late. In the property tax code, there's language that if they submit it late, there is a penalty that can be assessed. We don't have the code compliance officers or the authority in the code to go after them to pay that. It's the county tax office that has that capability. But they're not allowed to do it because we're the one who get the declaration and they get a copy of that. So we've been working with them, and Dallas is another appraisal district that we talked to, and we got a copy of their agreement to see how they do it. There's some other districts that do it also. And so what we've come up with, they have the code compliance officers. They have the right, according to their laws, you know, the county code and county laws that they follow, to go after these districts or these, these businesses for filing late and having them pay that penalty and interest that they're supposed to pay. So what we've come up with is a contract. Well, they will get whatever the monies come in. They get 80%, but we get 20%. I don't have sheriff that I can use to go after them. They do. So we'll get the reports just like we always do. We'll give it the declaration to them. They'll handle all the code compliance. They'll handle the sheriff going after them. They'll handle whatever suits have to be filed to collect it, and we'll get 20% of what they collect. I think it's a pretty good deal. I don't have authority in the tax code to be able to do that. That we're allowed to do that, but the county tax office has. And if you have any questions, we do have the county folks here from the tax office that can go into that. So we have been working on this for months and months and months. It's gone to county attorney. It's gone to Mr. Longoria, our attorney, made a few adjustments to it. And we've all come to an agreement now. We agree with the contract. According to the Texas government code, though, because it is a contract between two government entities, that does have to go before the boards for approval. So they will have to take it to Commissioner's Court for approval. But before they do that, we needed to come to our board for approval.
Yes, sir.
Does that pretty much cover it?
And this is like a name change.
No, sir. It's more of a contract because car dealers are supposed to supposed to apply on a monthly basis. Then at the end of the year, they have to send a declaration timely. And if they don't, then there's a penalty. But I have nothing that allows me to collect that penalty, but the county tax office does. So it's not a name change or anything. It's just, and the percentage goes between the county and the appraisal district, whatever's collected. So this way, they'll spend all the expense to collect it, and we get 20%. So it's not a name change or anything. It's just a service, basically, is what it is. It's a service contract. They're going to do this service for us. They keep a percentage and we get a percentage. Cut and dried, basic. Yes, sir.
Mr. Garcia or Mr. Gonzalez, what do you estimate as far as numbers? You know, these car dealers, they were here 1 month and they're gone the next month. But
No, 50 years this year.
no,
And they do it right. They
be
meet
here.
all the requirements.
he's got so much money, he can go nowhere.
Yeah, no, they do it right. I will say that.
Yeah, because there's a fluctuation. I'm just curious. I think it's a great service.
Well, we have in El Paso County approximately 640 dealers. And that includes franchise dealers and independent dealers. So depending on the weaknesses of these dealers failing to report, and it could be in the range of $100 dealers per year. So if you do the math, based on the penalties that can be imposed, maximum penalty could be $1,000. So if 100 dealers don't report, basically at 20% and 80% difference, the CAD would probably get about $20,000 possibly, and the remainder would be for the county. Of course, like Ms. Kilgore said, we already have this program in place. It's working very well for us. We try to seek compliance 99% of the time. A lot of dealers are just basically ignorant in doing this, in reporting timely. They do report to us more than they do the CAD because hasn't been really enforced 100% at the CAD level. But this way, it'll make us all around enforcement, and we do have the personnel to do this today. And we've had that program in place since 2003 that I can recall. Even though this law has been in effect since the mid-90s. Since 1995, this law has been in effect. Dealer community is aware of it. We're just trying to do our bit to try and make them to comply.
Hopefully by going back there with this and charging them this, they'll learn and we won't have those that are in non-compliance. Yeah.
Yes, sir.
So right now, are you collecting these penalties or you're not collecting?
We're not collecting them.
And moving forward,
We'd be
you're going to get
collecting.
20% of it for them to collect
Yes, sir.
on your behalf.
Right. And you heard on the audit about the extra income that is not budgeted. Well, this will be some extra income that will be in there that will help us offset the expenses.
Whatever we can do for the taxpayer, I'm all for it.
Yes, sir.
And does this compensation agreement mirror what you found in Dallas?
Yes, sir. It does.
Thank you, sir.
Okay. Mr. Nahara?
How did we come up with the 80-20 split? Why not 50-50?
We looked at Dallas's and some of the others, and because they're doing all of the work, and they have the sheriffs that will work with them if they have to go out there. They have the code compliance officers that are licensed for that or registered for that, and I don't. My cost is going to be quite a bit to do that, so I said, that seemed like a fair split. So I have no cost outlay at all, and the cost is all on them.
Well, you will, 80%.
Well, yeah, but they have to spend all the money. I won't have to spend anything. So it'll be a 20% profit, whereas theirs won't be an 80% profit because they'll have to deduct their expenses, and I don't.
But if we don't hire them, basically we get zero. So instead of looking at it as giving up 80%, you're gaining 20% that you wouldn't have never had.
Right. And I certainly understand that. I just think.
We looked at the numbers, like I said, the expenses that they have versus I have no expense. So we came up with that
How
split,
long
so
are
they'll
we,
pay for their
this
expenses.
is perpetual, or are we
Well,
under 3 years?
I think we can go, it'll be a contract that'll be in place until one of us decides not to use it. So we can look at it on a yearly basis, every 2 years, 3 years, see what we're getting. You'll see it in the budget amount when we have that extra income. If we see we need to make some other changes or we can do something differently, then for sure we can go in. Just the time involved in dealing with two government entities. Again, we've been working on this since about this time last year, and we're just now getting the final contract approved to present to you.
Of course, if we collect nothing, we pay nothing, right?
Yeah, if we collect nothing, we pay nothing. Now we're paying nothing, but we're getting 20%.
And do you have the authority to send a letter saying, hey, you didn't file on time?
That's theirs.
We,
That's what
but
they do.
without them,
Without them, I can send a letter, but I can't act on it.
right?
If they don't do anything, there's nothing.
Right.
Right.
But I'm just wondering if you had if you could at least send a letter saying
Sure.
you didn't file on
You
time.
didn't file,
owe us
yeah.
$1,000, and then if they don't pay, we can't do anything.
Right,
But if
exactly.
they do,
Well, we will send them a letter saying we've not received your declaration. We've been doing that. We haven't really, we haven't had too much of an issue, but we've noticed this last year back in, we've been working on this in 18, so 2017 we started seeing a lot more in non-compliance, and this is what got us talking in 2018 to get this done.
thank you.
Okay. Sounds like we've all had a good talk on it. So with that, is there a motion to approve
Second.
the vehicle inventory tax interlocal agreement with the El Paso County? Thank you, Mr. Rosales. And Mr. Nahara seconded. Okay. All in favor?
Aye.
Aye. Opposed? Hearing none, motion passes. That'll take us to number 9, discussion and possible action regarding the chief appraiser evaluation and compensation.
My fault, last board meeting. Would you pass this out? Rick, Dina, somebody. Hello? Somebody pass this out. Okay. My fault, last board meeting when we did the evaluation, my evaluation, nothing was agendized to take any action. So I was contacted by several of the board members and said, you know what, you need to put it on as an action item for compensation. There was quite a bit of discussion regarding that. So I did this, everybody received this before, and this was in your packet for my evaluation. And then, of course, it was passed out again during the executive session when you reviewed my evaluation. My evaluation came in at 2.78. It was a very good evaluation. So what I'm asking, I showed you the averages. I did show you, we talked about some of the things that I had done and some of the issues that we have dealt with. I was very excited about being able to sign off on a waiver on the refinery for 3 years in a row. That was a plus. The median level of pay based on all of these that are listed comes out to about 181 without Dallas and Houston. If you look at our own in-house pay scale, the median for my position is 176. I'm at 152. I am asking for an increase to bring me up to standard for the work that we do and the position that we are. I did do a September of 12. For 12 and 13, I received 2%, and that was 2% for 3 years. So it wasn't 2% each year, it was 2% for 3 years. So that was the max that I received. In 15 and 16, I did receive a 5%, but it was just once for 15 and for the year 16. So basically, I got an increase in 15 and nothing in 16. 17 and 18, I did receive a 3% in 17 and nothing in 18. Because somebody was asking, how often have you received a raise? I had kept my request down at a minimal amount because taxing entities were in a struggle in the earlier part. We wanted to keep our budget at a good amount. I feel like I've proven myself, so I'm asking for a salary of $175. You guys discussed it. It was not able to take action because it was not an action item, so I put it on it as an action item. You can agree, disagree, come up with another number, whatever you want, but it is an action item now, so you can do something.
Are there any questions for Ms. Kilgore?
What was that question?
The issue, it's on her salary, on
Yeah,
the
I know that.
compensation, and she's asking for 175 is what she'd like to see her salary at.
Mm-hmm.
And 176 was the median, am I correct, Ms.?
The 176 was the median based on our own pay scale
Okay.
audit that we did on our salaries here for El Paso CAD, and it was based not only on appraisal districts, but on other government entities of like
I
positions, and so that came in at 176.
So 176 is what locally it would come up to? She's asking for 175.
Is this on the base pay?
Yes, sir. That's on the
Not to
base.
include
I'm not asking, my contract will be up at the end of the year. At that time, we'll go over the extension of the years. I will then ask to look at, car allowance or anything else. At that time, I felt like that is more of a review of the contract. And right now, this is just on the evaluation that was done and compensation based on the evaluation. And of course, to be in line with other appraisal districts. And we threw in all different sizes in there so that you could see some low, some high. And I threw out for a median of all these that were listed, if you leave in Dallas and Houston, it came out to 184. If you remove Dallas and Houston, it comes out to 181. So it's fairly close. I'm not asking for that big of a jump. I know that that's quite large, so that's why I was looking at 175, which is the median in our own salary survey here for the appraisal district.
And Ms. Kilgore, we've got this budgeted.
Yes, ma'am.
Okay.
I promise I won't touch your
176 or
refunds.
175?
Yes, sir. Take. What would you like?
You said 176 or 175?
175. 176 is the median.
Oh, I see. Okay, I'm sorry.
Yes, sir. So.
Well, I think she's asked for it to be an open. It is, but, well, it's up to her, actually.
I agree with Vince.
We've got at least 3 attorneys in this room. Ms. Kilgore, you asked for this to be an open session.
Yes, ma'am.
I've got requests to adjourn into executive session.
I believe because it's my salary, I can request an open
That's
session.
exactly
and so
what
that's why I'm requesting an open
That's
session.
what I said.
I feel like last month we had 4 hours of closed session. I don't want to waste your time. You have training that you need to have, and I just feel like we don't
Thank
need
you.
another 4-hour
Okay.
session.
So her choice is open session.
You will not hurt my feelings at all, no matter what you say.
Thank you. Yes, sir. Mr. Nahara?
Yes, ma'am, Ms. Kilgore. My only experience to doing something like this beyond my own is with the school district. And at the school district, we consider the superintendent's total compensation package at the time of the evaluation. So it would surprise me that we would just consider your salary here and not, the entirety, including the extension of your contract, everything else. Why is it that we do it this way?
We don't, but at the last board meeting in January, they asked to not look at anything else in the contract other than this. Because the contract is not up to the end of the year, 2019. My understanding was at that time they would look at any extensions, any other years, and then other compensation.
Okay.
That was my understanding. I might be totally wrong on that, but that was my understanding.
That leads to my question then. Is it standard that we address this right now? I mean, your
Yes, sir.
contract is it addressed every year? Or
No,
is it-
my contract was for 3 years.
Uh-huh.
So, but your evaluation is every year.
Right.
By tax code, you're supposed to evaluate your chief appraiser every year. So that's why that's done. But my contract is a 3-year contract from 17 to 19.
They don't line up.
So it doesn't line, right, because my contract will be to the end of the year, which will line up with the 2019 evaluation, but it doesn't line up with the evaluations that happen every year. And this evaluation was actually, we sent everything out in December, but we didn't have a meeting in December, so it happened in January. So next year, because the contracts or this year, 19, because the contract's due at the end of the year, then the evaluation and the contract will line up. But you have to do an evaluation every year, even if your contract's not up yet.
Does this mean we're amending the contract right now?
Yes, sir.
Your salary part of the contract?
You'd be amending just the salary part of it. Yes, sir. I do have pension just like the rest of the employees. My leave is just like the rest of the employees. All of that is in line with the rest of the employees. Our pension is with the Texas County Retirement District. So it's all based on the same amounts for everybody. There's no extra monies that can go into it. We're already there.
And we're currently at 7% employee
Yes, sir.
portion, and it's 200% match.
Yes, sir.
So with that said, do we have a motion?
Make a motion.
Yes, sir. Thank you, Mr. Rosales.
accept the offer of 175.
And I'll second the 175. So there's been a motion made by Mr. Rosales, seconded by myself, to approve the $175,000 base pay for Ms. Kilgore. All in favor? Aye. Opposed?
Nay.
No.
Okay, we better count them up then. So let's go around the table. Mr. Velarde, your vote was?
I'm an aye. Can I do this? I know we made the motion, but can we do a subject to? A subject to?
Yes, sir.
Because if the contract's gonna come up real soon, I think I'm okay with it, subject to that we don't have another request at contract time to add additional salary.
Would you like to amend your,
Well, the point well taken. However, we can, if it comes before the board, we can approve it or disapprove that request.
Right.
But when let me use my logic, and when you look at this, the last 3 years in 16, 17, and 18, and now we're in 19, 3% in 4 years. No matter where you go, based on the quality of work that's being done in this organization, you know, is 3% too much in 3 years? I think if we're gonna be, I think this is part of what the city of El Paso needs to understand. If we're going to be with the big boys, we've got to pay our dues. We can't be going back to 1950 the way it used to be. If we're going to be progressive, yes, it might cost us some dollars, but we just picked up another 20,000 here that we weren't expecting. And so, from my perspective, and I'll amend it if it makes, because I'd like to see it. I'll amend it if you want.
And I just only share it. I personally kind of going to what Mr. Nahara is saying is I kind of like to tie it to the contract one-time negotiation.
Yeah.
And we have a contract, and I'm good with annual amendments.
and I'll amend my second.
Yeah, okay.
Okay.
I don't
And
know I'm
if it'll make the board
good
feel
with a
better?
6-month amendment and then it moves.
Yeah.
on.
Understand?
If it'll make the board feel better, as you can see, there's several years I didn't request anything
Yes?
because I think of the CAD first, always have, and so we'll look at the contract as a whole and more of the benefits side of it than the salary side of it when it comes due at the end of the year.
And I'm happy to give it. You've done a wonderful job. I just,
Okay.
one time out.
Understood.
Do
And
it early.
to please note in the motion
I'm fine
that
with
there
that.
was amendment to the motion in the second. Motion made by Mr. Rosales, second by myself.
So I'll be an aye.
Yes, sir.
You know, and as I said in the last meeting, you know, I tried to put this in the context of other positions. I also sit on the board of directors for the MPO, and we're hiring a new executive director. This salary would exceed what's being offered at the MPO. For that executive director position, we're coming in at 170. 175 also exceeds what any member of Congress, whether it be a congressperson or a state senator, makes. It exceeds what a district judge makes. Again, last time I think an increase is warranted and deserved, but just setting an arbitrary 175 exceeds what similar. Again, the MPO has several staff, a $2 million budget, but also deals with several $1 billion worth of projects that has to go through complex planning. We require the person to be an engineer and a planner, and this would exceed that.
Thank you, Mr. Pettis. So with that, we've got a motion and a second on the floor, and
Calling the vote.
yeah, we're going to call the vote.
If you ask me, I'm an aye.
Okay, Mr. Lowenfield?
Nay, can I, with comment?
Sure.
That as a representative of the city, standard that we use is typically been 5%, and I agree, Ms. Kilgore. I think that you've done a phenomenal job, and I think that you do deserve an increase, a 15% increase when we've seen standards of 2, 3, 5, 0, whatnot. Just as a representative of the city and to be consistent with what we're doing with the city.
Thank you, sir. Mr. Taylor? We're voting on
Yeah,
the salary.
I just want to give my feelings like everyone else
Yes,
is
sir.
giving them. I just feel that the appraiser was rated above average. I've heard none, or I have not seen any dysfunction in the finance area. I really have not seen any hostilities in performance amongst all the employees. I see a great operation. And so if everything looks and has been evaluated as above average, and compare it with the chief appraisers throughout the state with their populations, the requested 175 is below what I asked for
Yes, sir.
her anyway, but I accept that.
Thank you, sir. And your vote is yes?
Yes.
Thank you, sir. My vote is yes.
No.
Mr. Rosales?
I'm for it. My vote is no, and I'll echo the same sentiments with comment with Ronnie that I think you do a phenomenal job, and you're exceeding expectations in nearly every way, and I totally agree with that. We just, as representatives of the city, I was more along the line of a 5%, which would have equaled the highest raise over the last 7 years, and 15% is just out of what we're comfortable with, but that has nothing to do with my appreciation for you. So,
thank you.
Thank you, Mr. Trimble. Mr. Nahara?
My vote's yes. And the reason it's yes is because if we, Ms. Kilgore said she hadn't received a raise. If we looked at the comparison, positions, including the chief appraiser, it's market driven.
Yes, it is.
And, I just sit and I think if we didn't have Ms. Kilgore, if Ms. Kilgore went somewhere else to pursue, any of these higher salaries, what would that cost us to try and replace the position? Because she hasn't received raises, throughout every year. And it would appear to me maybe even the salary itself hasn't been evaluated according to market. So I did some quick math, and counting those years she didn't receive a raise, if it was 3% a year, we'd be almost at 172. She appears, at least from my perspective, to be under market. So 175 seems fair, taking those variables into account.
Thank you, sir, for your expertise also in ciphering that up. And I believe the count was, could you help us, Ms. Solomon?
5-3.
5-3, motion passes. Congratulations, Ms.
Thank
Kilgore.
you, board members. Thank you. And thank you for your confidence. I mean, we do want to be one of the best, and whether I get paid or not, I still will do whatever I need to do for this place.
And I think that Mr. Taylor
my
made a
home.
really awesome point, that you're a great leader of a great operation here, and we're all very thankful for the job that you're doing. So thank you so much, ma'am. And that will take us to adjournment.
Nope,
But
one
don't-
more.
No?
I would
Oh,
like to
chief
give
appraiser
you-
report. I'm sorry. You're going to have to work for your money, Ms. Kilgore.
I know. What? Wait a minute, I'm done. Okay, I just wanted to give you a couple updates real quick so that we can get into your training. I wanted to let you know, remember I had told you that the county tax office was bringing a mobile unit over to our parking lot the last 3 days of January. And I got the reports, the city, I said county, I'm sorry. The city tax office for the collections. So our mobile bank, in the 3 days that they were here, they had, this year was 780 transactions for a dollar amount of $1,842,000 that they collected in those three days here. They had less transaction, it was 811 transactions last year, but they collected more money. Last year was $1.69 million. This year was $1.84 million in collections. I've been visiting with Maria Pasillas to see if they want to extend the mobile unit here in our parking lot. And I want you to know, everybody that came in and said, thank you, thank you, thank you. We help them if they don't have the bill. We let them print a bill here. We don't charge them. We're here for the public, we're not always a bad CAD. We do try to help, so, that works out. The maps reviewer is here on site. The maps, of course, is the methods and procedures review that they do. The reviewer is here. He's looking at everything. You may get a phone call from him. He will be looking at everything from the time somebody walks in the door to our board members. He's not looking at values. He's looking at, are we complying with the tax code and everything that we do here. He's visited with accounting. He visits with our ARV, Appraisal Review Board Department. He visits with everything. So he'll be finishing up tomorrow. Our property value study, the property value study is a study of values in all the school districts. And they do a random sampling. They do a stratification of all values. They'll do a random sampling of residential, commercial, vacant land, agricultural, business personal property. And I'm here to say, out of the 9 school districts, we had 8 school districts that met confidence level, which means they were over 95%. So we don't have to do anything with those. We had 1 school district, EPISD, that came in at 9.9090, so about 0.91. We need to be at 95%. We've already visited with the EPISD accounting department and with the superintendent. We've gotten their permission for us to go ahead and continue with the protest of the values for EPISD. Right now, we're gathering all of the data. Where it was hurting in EPISD was in apartments, and that had to do with a lawsuit that we had. Instead of going to court, they brought in, finally, the information, income information, so we had 3 years of data that we're able to present, and then a couple of other things. Our commercial value was a little bit down, but that was due to lawsuits that we settled informally. So we have all the documentation. We're very confident that we'll get it back up to the 95% of confidence level. But Clint, Fabian, Sanelli, Isleta, Anthony, Candichillo, Tornillo, and Socorro all came in above 95%. If you want to know specifically for the lower valley entities, Clint was at 0.96, Fabian's 0.99, Sanelli 0.95, Isleta was at 0.95, Anthony was at 100, Canutillo was 0.9769, so almost 0.98, Tornillo was 0.96, and Socorro was 0.99. So our numbers look really well. If you look at us compared, Dr. Marie, Cynthia, if you could pass that out. I'm going to go ahead and we ran copies for everybody so you could have it, so you could let your entities know. We also ran a comparison of some of the other appraisal districts to show you where we are. Mr. Rosales, you were talking about how do we compare with other counties, and this will show you residentially, commercial, and business, personal property or commercial property. It shows you the ratio in several of the other appraisal districts versus ours. So you can see where we are in the value study that the state does. So there's copies for you. We wanted to let you see those numbers that you can pass on. For those of you that represent Mr. Velarde and Mr. Taylor, EPISD, we are in communication with them, and we'll be letting them know. We'll probably be filing the protest the first week of March to the state. We've already been in contact with the officials there at the State Comptroller's office and have let them know some of the information that we'll be sending, and been dealing with them almost on a daily basis. They're pretty much tired of us calling them, but we're going to keep calling. So other than that, I'm done unless anybody has any questions or anything they'd like to visit with me on.
Any questions, board? Any? And
we need to adjourn?
Yes.
Okay.
So thank you. Meeting adjourned, and it is 6:20, I think it's a 6:23.
Okay. Board members, if you'd like, we have sandwiches. If you want to grab a plate.